If you are willing to do the work, if you're willing to do the research and spend 10 hours thinking about this or 100 hours, well, you can buy Bitcoin for a 99% discount. If you wait until the year 2035, your bank's going to tell you, yeah, it's easy, we all support it, it's good, we'll borrow against it. Then you're going to pay 10x more. And if you wait until the conventional wisdom is this is the world's greatest asset class, well, it's going to be $10 million coin, and you're going to pay 100 times more. The consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year. I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. Mm-hmm. My 21 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. That's 276 by 276 by 276. You can't make any more of it. The conventional wisdom is this is the world's greatest asset class. Well, it's going to be $10 million coin, and you're going to pay 100 times more.
Michael Saylor's latest remarks capture a defining shift in the architecture of global wealth. He describes Bitcoin as the first decentralized property rights network, a digital infrastructure that allows individuals to store, move, and protect wealth without reliance on governments or banks. Saylor argues that Bitcoin represents a bank in cyberspace, where economic sovereignty becomes possible for anyone, anywhere for centuries to come. Unlike fiat currencies or physical assets that depend on local laws, fragile institutions, or physical security, Bitcoin is incorruptible, mathematically finite, and universally accessible. This, he asserts, is the economic equivalent of discovering electricity for money. It's the first form of digital capital, liquid, borderless, and unconfiscatable. In essence, Bitcoin is not merely a speculative asset. It's the foundation of a new global monetary protocol that empowers individuals to own value as securely as they can communicate language or mathematics.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
It's a very elegant, decentralized way to create a property network or a decentralized banking network. If it's a protocol for economic prosperity, right? So it's like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offer me nine bananas, I know what 9 is, right? Because we both use the same numbers and the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank, and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you, right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in a currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index or New York or London real estate, or maybe sports teams if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital. Right, if I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone. I would submit to you, there's not a single thing you would buy in Africa. There isn't the capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take your, if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye, right? And if you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against it. You cannot get a loan. You could post, you have $10 billion of Bitcoin, you can't get a $1,000 loan from a major bank right now. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have the liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. What percentage of the equity in your big tech company would be sold by employees? When they all got insanely rich, probably 10, 20%, right? They would sell at least. So we're waiting for that to boil off. And we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures. And they should be, right? I mean, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional traditional banking establishment to get spun up, where they're custodying the asset and they're extending credit against the asset. And it's worked its way into systems. I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself.
Saylor's central thesis positions Bitcoin as digital capital, the ultimate long-term store of value in a world where all fiat currencies are designed to debase. He draws a stark contrast between traditional wealth preservation, real estate, equities, or gold, and Bitcoin's ability to transcend jurisdictional and physical limits. As he explains, no other asset allows instantaneous global transfer, perfect divisibility, and absolute sovereignty. For the first time in history, an individual can carry their wealth across borders, through generations, even to the grave, something no empire or central authority could ever guarantee. Saylor foresees Bitcoin evolving into the world's reserve capital network, underpinning future economic systems much like English or Arabic numerals standardized communication. And as global banking infrastructure integrates Bitcoin for custody and collateralization between 2025 and 2028, he predicts the next leg of exponential price discovery, where institutional credit markets fuel a revaluation phase that could drive Bitcoin toward $1 million.
If the trillion-dollar banks are willing to custody and they're willing to extend credit and they're willing to handle the asset class and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds. The consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year. I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 21 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point. My message is, if you live in Argentina and you've watched the currency collapse completely every 20 years for the past 100 years, and if your family was impoverished 5 times in the century, and an engineer named Satoshi came along with a way for you not to be poor and destitute, and he said, well, it's no more difficult than just put this wallet on your iPhone and now you don't have to be poor, then you would be utterly captivated by that vision. And that is the plight of everyone. If we go on my hand and say, how many people have lived in societies where they had their property rights and their wealth stripped away from it? It's everybody in Africa, everybody in South America. Brazil's currency collapsed, Argentina's currency collapsed, Cuba's got no currency, Venezuela collapsed. Everybody in the Middle East, people in Turkey right now. Russia collapsed 30 years ago, Russia's collapsing now. Everybody in Ukraine, everybody in China doesn't trust their currency, right? Everybody in Europe doesn't trust their currency. So if you're a skeptic, you must be an Upper East Side trust fund baby, and you're lucky enough to be born rich in the only country in the world where the currency didn't collapse in the last 100 years. And you know, your currency's lost 99.9% of its value over 100 years. The US dollar has debased 7% a year on average for 100 years. So you're probably smart enough, if you're wealthy and a skeptic, to know that you shouldn't store your family's assets in cash dollar bills. You're probably smart enough. You're privileged enough to be able to invest in U.S. real estate and U.S. equities, because you know that wouldn't work in any African real estate or any African equity, right? Or any North Korean equity or et cetera, any Chinese equity. Wouldn't work in Japanese equities either, right? In fact, I could go on and on and on. So you're a privileged person that happens to be rich or happens to have money that's invested in the world's most secure assets in the U.S. But Bitcoin is digital capital, and it's for everybody else in the world that wasn't as privileged as you. For them, it's the difference between 7 billion people living in destitution and 7 billion people having hope. And so Bitcoin is an idea whose time has come. If you're one of those people, right, you're going to cling to it like a diabetic would cling to insulin, right? Before Bitcoin, every company in the world, everybody in the world is a type 1 diabetic. They cannot store economic energy, right? So if you're in that situation, that is life-affirming for you. It's not a laughing matter. That's why people are so passionate about it. But let's say it's not. You're not one of those people. You happen to be one of the 500 million or a billion elite that lives in a very comfortable environment. It just happens to be the best idea for you. It's the ultimate alternative investment. It's an asset uncorrelated to a currency, uncorrelated to any nation state. It's not an equity. It doesn't have counterparty risk. So the reason you ought to look at it, it's the most valuable real estate property. It's basically buying a piece of cyberspace. And if you had a chance to buy an acre of Manhattan in the year 1700, you would have been paying top dollar for it. And then every decade for the next 300 years, someone would pay more. And at what point did buying land in Manhattan ever become a bad idea? It's still a good idea. And Bitcoin is cyber Manhattan. It's one day 8 billion people want to put their money there, and there's only 21 million blocks. That's 276 by 276 by 276. You can't make any more of it. So our view is it's just a good idea. It's the best idea for a conventional investor, but it's a life-saving idea for the rest of the world.
For Saylor, Bitcoin's true power extends far beyond Western investment portfolios. It's a lifeline for billions trapped in collapsing currencies from Argentina to Turkey. He frames Bitcoin as an instrument of human rights and financial self-determination, offering hope to societies that have endured repeated wealth confiscations and inflationary ruin. In his vision, Bitcoin is to economic energy what insulin is to a diabetic, essential for survival. Even for elite investors, it represents the most pristine, uncorrelated, and censorship-resistant asset ever conceived, a scarce piece of cyber Manhattan in a digital age of limitless demand. With only 21 million blocks of immutable property available, Saylor argues that Bitcoin is not just sound money, it's the ultimate real estate of the 21st century. As the financial establishment begins to bank the unbanked $2 trillion asset class, Saylor believes the world is witnessing the monetization of digital property on a planetary scale.